I acknowledge that I am hosting and recording this webinar from the lands of the Gadigal people of the Eora Nation. I also acknowledge the traditional custodians of the various lands on which you all work today and the Aboriginal and Torres Strait Islander people participating in this webinar. So good afternoon, everyone, and thank you for joining our ENFP webinar. My name is Kim Kellaway and I'm Head of Clients and Markets at HLB Man Judd, and I welcome you on behalf of the ENFP Strategic Alliance of the Not-for-Profit Specialist Team of HLB and CommBank Yvette Flynn. So today we're presenting the results of the findings of our financial management survey, and I'd like to thank all of those that participated. Presenting today are a few of our HLB Not-for-Profit Specialist team. So I'd like to introduce Aidan Smith, Partner in Audit and Assurance and Head of HLB Man Judd Australasia, John Raphael, Partner in Business Advisory, Ashley Faulkner, Manager in Financial Transformation, Andrew Ash, Director in Business Advisory, and our guest presenter, Beatty Barton. So Beatty is the Head of Customer and Growth of Yellow Canary Australia, the fastest growing payroll reg tech company. So Beatty is an executive and workplace compliance specialist with over 10 years of experience with ASX 50 companies, Australia's largest not-for-profits and retailers. Previously, she was the National Head of Workplace Compliance and partner at a professional services firm. So I'd now like to hand it over to Aidan Smith.
Thank you, Kim. I think you just promoted me there as Head of HLB Australasia, as Head of Not-for-Profit HLB Australasia, just before everyone begins congratulating me that I've been promoted. I haven't, unfortunately, maybe for Christmas. Anyway, thank you. We're here today to talk. We've got some excellent presenters. We've got me as well. I'm going to give you a little overview before I pass you on to our presenters. So the first one is the participation rate. Actually increased this year 16%. We had over 80 people contribute. So thank you so much for that. And that's, of course, a different wide range of not-for-profits. We had 57% who were traditional charities, 25% who were either association, a membership organisation or a club, 10% social enterprise, and 8% other, which is going to bucket for those that don't fit into the previous three categories. And that includes foundations and companies limited by guarantee, who of course can fit some of the other categories as well. And all right, so last year, 2021, it was still all about COVID when we did this survey. This year, it's still, well, COVID still have an impact, but it's about the economic changes, which a lot of them I think is as a result of COVID. But there's still other ones. There's rising inflation, we've got interest rates, we've got employee shortages, there's horrific weather events and the horrific war as well in Ukraine. That's all having an impact on the economy as well as COVID. Now, we asked the question, has COVID impacted on your financial performance? 46% said negatively, 24% said it had a positive impact, and 30% said that it had no impact at all. That's interesting also when we look at some of the responses we've had in prior years. The negative impact, in prior years there was obviously government funding, JobKeeper, JobSaver. That's no longer there. COVID is still having an impact now. And it's interesting that 46% are saying that is having a negative impact as well. Yeah, now, that impact of COVID, we've asked the question, has revenue grown in the last 2 years? An interesting 62% of participants said it had, and 38% said that it hadn't. Now, then the question about budgeting a surplus over the next 12 months, we had 48% saying yes, they're budgeting a surplus, and 52% saying no. Now, an interesting thing about this survey is that it's at a point in time. It's interesting to see the results taken when this survey went out over the last month or so. So, majority, but not overwhelming amount of said that the revenue has grown. And that's been subject to a number of things. There was additional work with COVID happening. There's a lot of additional services that not-for-profits had to provide. There was some government funding as well that they mentioned earlier. So, but has that been a surplus? It possibly did in the past, but now we're seeing the next 12 months, well, the economic uncertainty that we talked about a minute ago means that now the majority, a small majority, are now saying that they're not budgeting a surplus. So even though revenue is growing, it's not necessarily going to translate into a surplus. Now, if you're going to have growth, the question is, do you have enough resourcing? Or if you don't, can you use technology to overcome that shortage in resourcing? Or can you become more efficient in how you do things? If your revenue is going to grow, or what if it doesn't? Have you got a budgeting process in place that you can look at and say, okay, can we tweak something to see what the impact is in the bottom line if the revenue doesn't get to where it should be, or if our costs increase or change in a way that we weren't expecting? And also with resourcing, there's all complex awards out there. How do you ensure compliance with the obligations? It could lead to liability for the company and even the directors. Well, you're all in luck because we're going to be talking about all these matters today. And I will start by passing you over to John Raphael, who's going to talk about resourcing. So John, over to you.
All right. Thanks, Aidan. Good afternoon, everyone. Thanks for joining. With the event of COVID-19 that unleashed on the world in early 2020, not-for-profit organisations have been driven to adapt with speed, implementing new systems and processes, as well as ensuring the mental well-being of their employees. This is evident with 87% who responded to the survey saying that the finance team have been working remotely during the last 12 months. Now that's a majority, supporting the new focus on flexibility and the greater work-life balance. Working from home is no longer considered a benefit, it's the norm and it's here to stay for the foreseeable future. We also asked how many people are in their finance team, with a majority of 54% saying that their finance team was made up of 2 to 5 people. Now it's important to note that these may not be full-time employees. Smaller organisations are less likely to have less people, in their finance team, with 25% of the respondents saying that only one person was in their finance team. So here lies an issue. From our deep experience working with the not-for-profit organisations, I'll share with you the challenges not-for-profits face and how they can be managed and tackled. Now, if an organisation is not-for-profit, does that mean financial management really, does financial management really matter, I ask? Well, yes. This might not seem obvious at first, but it really matters that not-for-profits manage their finances as much or more closely than commercial organisations that we work with. As you're well aware, often not-for-profits will receive funding from federal or local governments and from foundations. In almost all occasions, these funding sources require rigorous, detailed reporting back to the funder. As you may know, they are called acquittals, regularly detailing how, when, and on what the funds were spent on. The acquittals are often audited by third parties, and there are frequently limitations on what can and cannot be spent against the specific funding. Meeting these obligations are onerous, but necessary to ensure ongoing funding, as you know. Reporting of acquittals requires a well-staffed and well-structured finance team, and ensuring that the spend is managed as per the funder requirements requires strong financial management. If strong financial management is not present, not-for-profits may spend in areas where the funder has not approved, leading to overspend, which cannot be recovered. Let me break it down. What does a finance function team do and how you can resource this? Well, traditionally, they're responsible for the day-to-day transactional accounting for organisations, such as raising and chasing invoices, paying bills, and dealing with bank reconciliations. This involves managing cash flow and ensuring that there are enough funds available to meet the regular payments. Now, we can divide the finance function into 4 processes and set out the tasks for each process. Bookkeeping, as we know, is the day-to-day work. Accounting includes the cash flow analysis, profit and loss, reviewing deferred income, calculating depreciation, prepayments, acquittal reporting, and the balance sheet. Financial management then is where we get the financial team to interpret it and data for budgeting, forecasting, and profitability and variance reporting. And then we wrap it back up with the financial planning and analysis. And that usually involves the big picture thinking with business financial planning, financial strategy, and investments. Well, this is where we can come in and support you. Have you considered outsourcing? Well, one of the main findings of the survey is that 37% of the not-for-profits are looking to outsource some of their finance function. But before I go there, let's talk about the current state of play. Who has tried to recruit over the last couple of years? Here's a little challenge for you. With the Australian unemployment rate sitting at 3.5% at September 22, recruiting skilled employees remains a challenge. On top of this, at the Australian Jobs and Skills Summit held in September 22, it was highlighted that the record peak demand for accountants had led to 9,000 vacancies. Looking forward, it's concerning that enrolments in accounting degrees has sunken by almost 3,000 students in 2021. What happens if you can't find a person to join the finance team? Well, HLB can provide a solution where you can outsource these tasks to our team and de-risk your finance team. We can come in and provide the organisation with a turnkey solution where our employees who are well-trained accountants can document the process currently managed by your finance team and take over from there. When working with your finance team, we can look for efficiencies and ways to better manage tasks. If there's opportunities to engage in technology, we can liaise with our financial transformation team, which you'll hear from Ashley shortly. Or a way to minimise your overhead costs of the finance teams, we can look to offshore some of those tasks to our accountants we have sitting overseas. Now, let's cover off some of the benefits of outsourcing. As organisations look to manage costs and resources more effectively, outsourcing all or some of the finance function have become more and more popular. And as the economic future for many is still not clear, outsourcing the finance function is seen to be a very good solution for many organisations. Now, the benefits for outsourcing are reduced costs, increased productivity, time saving, skills and expertise, and resourcing when you need it. But on the other side, we have some downsides. Some of it can be unexpected costs, I guess a reduction in face-to-face time with your local team, loss of control, and I guess the risk of choosing the wrong resource, hence choosing the right company to partner with is important. Recruitment and retention of key employees remains an area of concern across all industries and sectors, and the not-for-profit sector is not immune from this. It's not surprising that when asked what the biggest risk your finance team has, 48% of the not-for-profit leaders surveyed said that staff retention, and 28% specifically mentioned key person loss. When comparing this to the findings in 2021, we had 48% of the not-for-profit leaders saying that staff retention, but no one had specifically mentioned key person loss. This may be reflective of the changes organisations have seen in the last 12 months. Now, key person risks when your business relies too heavily on one person or a small number of individuals who provide a large value to your organisation. They can work in any department, but a particular risk is your finance team. As mentioned earlier, most finance teams are lean. What happens if a key person in the team is hit by a bus, suffers with an illness such as long COVID, takes an extended holiday because international travel is now back on, or even worse, leaves your organisation? What do you do? Well, to manage that key person risk and not to expose themselves in the first place, prevention and preparation is key. I would suggest to conduct a thorough workforce analysis to determine who your key individuals are and what rate of risk they present, and then establish a business continuity strategy. This would include identifying appropriate stand-ins, consider taking out key person risk insurance, establishing mentoring and work shadowing and cross-training initiatives, or creating a standard operating procedure and checklist for all processes. Building that an organisation framework where critical knowledge, relationship, or IP is not retained by one person or individuals. You can embrace technology or look at outsourcing. Now, increasing organisations are leveraging on technology to eliminate key person dependency through automated workflows. responsibilities, and centralized information gathering and storage and knowledge sharing. Other key changes from last year's survey that were mentioned was a lack of documented processes and loss of corporate knowledge, which accounted for 23% of the respondents. Highlighting the challenge that for the last 2 years, it's interesting that 5% of the respondents said burnout, hence replacing an employee can be a costly exercise. It is estimated that replacing an employee can cost up to 2 or 3 times the outgoing worker's salary, from advertising to screening applicants, interviewing, costs of onboarding and training, lost productivity and engagement. So what can employers do to keep their employees? There is no magic answer here. What you can do, however, that is a cookie cutter approach will no longer work. What motivates one may not motivate another. At the heart of the challenge is communication. You need to be having open and honest conversations with your team, understand their motivators and what they want from their job and your organization. These conversations may not always be positive. However, it's best to know in advance that someone is looking for a new challenge and wants to move on rather than finding out when they resign. Often when organizations are recruiting, they may be desperate to fill a role as they have limited time, and they can be costly decisions employing the wrong person, which could not only be a waste of time and money, but also have a cultural cost. The cultural debt created from a mishire can't be physically equated, but it's disruptive to the organization, and as a whole can have a knock-on effect and damaging effects to the organizational culture. High turnover in your finance team can lead to major problems. It can be lower productivity, delay in financial reporting and decision-making, and even trigger a snowball effect against the remaining team members. Plus, recruiting and training and replacements can be costly and time-consuming. Some of the turnover is natural in every department, but if turnover is in your accounting department and has become excessive, it may be time to consider some of these measures. So strengthen your bond with your employees, work closely with your HR or your hire a consultant, and create and implement a flexible scheduling or administer an employee satisfaction survey. This will help identify any flight risks. And then hopefully you can uncover some root causes for departure and address any common themes. So just to wrap it up, the piece on resourcing, now that the dust has settled just a little with the pandemic, and I guess we're living in the new norm, I urge you to check in with your finance team, ensure they are connected and engaged in the organization. Ensure they aren't overworked and stretched. If so, it might be time to do a review of their tasks and see if there's any benefit of partnering with a firm such as HLB to outsource some of that finance function work to our team of professionals. If you'd like to catch up for a coffee or to discuss any pain points you may have and to see if we can assist, I'd be more than happy to. I can share our successes of working with other not-for-profit organizations and what we can do to help you transfer your finance team. Thank you. I'll hand over to Ashley to talk about technology.
Thanks, John. Hi, everyone. It's great to be here today to talk to you all about technology. Our 2022 Not-for-Profit Leaders Report included several questions on technology. 87% of our survey respondents said that they had investigated technologies that could assist their finance processes, which is an increase from last year where 73% of respondents said the same. Implementing new technologies can help organizations to work smarter and more efficiently. When we drill down further into this question, we see that 95% of respondents had investigated cloud-based software. When we compare the results to last year, there's been a significant increase in cloud-based software, as only 57% of respondents said that they had investigated this in 2021. Most accounting software providers now offer cloud-based options as demand has steadily increased. This is understandable given cloud-based solutions allow people to work from anywhere, something that has become a lot more important over the last couple of years. There was also an increase in the number of respondents that have investigated optical character recognition, or OCR, from 9% last year to 17% this year. OCR is becoming more popular, particularly for accounts payable modules. Robotic process automation, or RPA, has had a smaller increase from 9% last year to 12% this year, but we would expect to see this grow rapidly over the next few years. Our survey also asked respondents to consider how important different technologies are to their organisation. The top two responses were integrated systems and data security. It's not surprising that data security is considered a priority to organisations, given the recent high-profile data breaches at Optus and Medibank. There are steps that you can take to help prevent data breaches, including keeping all of your software up to date, and this will make sure that you have any of the latest security patches. Having a strong password policy, such as requiring passwords to have a combination of letters, numbers, and symbols, as well as changing your passwords regularly. You should also consider performing regular backups of your data and having these held off-site in case that your network is compromised. And also training employees on how to spot phishing attacks and making them aware of potential email scams. A common phishing attack is an email that looks like it is sent by your IT department, but which asks you to click on a link to change your password. Integrated systems can be key to improving efficiency within the finance team. It's common for organizations to have several different systems, such as a membership database or an invoicing system, along with a payroll system and a separate general ledger. At the end of the month, the data then needs to be transferred from the various systems to the general ledger, requiring manual reconciliations and journals. Integrated systems reduce the need for these reconciliations, and they also improve the quality of your data, reducing errors and allowing you to perform reporting throughout the month, which shows a complete picture of your organization. We also asked how many organizations still had manual processes. The most common response was 25 to 50% of processes that are still manual, with 37% of respondents choosing this answer. This suggests that while cloud-based software packages have many benefits, they may not be able to help with automating all processes. This is where OCR and RPA can provide further automation capabilities. I'd like to show you a short video now featuring Hope, who will explain automation in further detail.
Hi, my name is Hope. I am a not-for-profit digital employee. You might have heard of UiPath, Automation Anywhere, or Power Automate. They are tools that enable users to automate various parts of their business processes through what is called robotic process automation, or RPA. These providers are making automation easily accessible to organizations through low to no code software. At HLB, we currently use Power Automate and UiPath. Power Automate is a Microsoft product included within the Office 365 package. We have used a combination of it and UiPath to automate various processes within the firm. To achieve automation within your organization, you don't have to invest heavily in automation products. A lot of tools are readily accessible to your organization and are a cost-effective solution for your automation needs. You may ask, what benefits can I achieve from automation? Well, automation means that your employees will be spending less time on administrative tasks, and instead, will have more time to focus on the organization's mission and strategic priorities. What can a digital employee like me do for your organization? I can update databases and spreadsheets, generate reporting, download reports and documents from websites, write and send correspondence to donors, members, and sponsors, prepare end-of-month work papers, and lots more. Introducing automation into an organization can be a big change for employees and needs to be carefully managed, which is something HLB can assist with. By integrating automation into your strategic priorities, you can create time savings for your employees to focus on accomplishing the organization's goals.
Thanks. So as you can see, there are many different options for organizations to consider, and it can be difficult to know what is right for you. Automation can be overwhelming, but with the right tools, you can achieve benefits rapidly. If you're using Microsoft 365, then you may already have access to some automation tools. Automated workflows can be used for many different purposes. Some examples that we're using internally include collecting responses to an annual declaration and then automatically sending reminders out to staff once the due date is passed. We also are downloading information from a website and then copying that data into an Excel template. We also have automated the generation and population of standard letters using a chatbot and content controls in Word. These types of automated processes may only take weeks to build, but can provide an organization with time savings as soon as they are implemented. Before embarking on a technology transformation project, it's important to consider how ready your organization is. There are a few key topics to consider. Firstly, data. Do you have different systems to maintain all of your data? And which system is your source of truth? For example, if you're implementing a new accounting system, then you can take the opportunity to tidy up your chart of accounts and to make sure your contact lists are up to date and complete. If you're looking at automating processes, then your data will need to be relied on by digital employees or bots. Second is readiness for change. Why do you want to undertake a transformation? Are your staff ready? And have you addressed any concerns that they might have? Communication is key when undertaking a project that will change the way that people work. Lastly, processes. Are your processes documented already? Are there different ways of performing a process? And if you're considering RPA, are your current processes suitable for automation? Documenting processes can be a tedious exercise when you start. However, there are benefits to this. Having processes that are documented will ensure that you don't lose critical information when staff leave, and it will also allow you to review your current processes and see where you can make improvements or do things more efficiently. Well, thank you for your time today. I'd now like to hand over to Andrew, who'll be talking about forecasting and financial modelling.
Thank you, Ashley. Yeah, so as Ashley said, so I'm a business advisor, so I'm here to, I guess, talk to you about, the puzzle that is cash flow forecasting. I spent a lot of my time on this particular topic. So firstly, what are we hearing from organisations at the moment? What are people actually experiencing? So they're telling us that the post-COVID years are shaping up to be very different to the COVID years. 70% of people told us that cash levels were either not affected or were positively affected by COVID. Now, I think this isn't surprising. The government injected a fair bit of stimulus into the economy. It was very, very needed at the time. But as a result, a lot of people that thought things were going to be pretty bad maybe only experienced a downturn period of a month, but still received stimulus over a longer period of time. So we're actually seeing that a lot of businesses managed to build their cash reserves over the COVID period. Now, the flip side of this is, when you inject a fair bit of money into the economy, coupled with, the war in Ukraine and, supply issues, this has started to result in inflation. There's less supply out there, and there's also more demand because people have more cash. So it's not surprising that with prices increasing due to inflation, that 59% of respondents said that they believe their cash reserves are going to be affected by the current economic situation. So I think generally there's a consensus that things are going to be harder in the next year. So with that in mind, how are organisations reacting? What are they saying they're doing? So 38% of respondents said they're increasing prices. I was actually surprised by this. It's actually have increased prices. It's actually quite a low percentage. 59% of respondents said they're going to increase prices over the next 2 years. And 59% of people said that they're looking to diversify. So, one of the big levers that you can pull when trying to manage cash is pricing. And it seems like a lot of organizations are going to try and pull that lever, albeit it's a little bit delayed. So they're obviously, if inflation's going up, 7%, they're going to actually wear that cost until they actually start to increase their prices. So like I said, increasing prices is one lever that you can pull, albeit it's a very powerful one. There are other levers that you can pull. But if we stay on the, I guess, the topic of increasing prices, what do you need to consider when, I guess, raising prices? What questions should you be asking yourself before you actually, pull that lever? So I guess firstly, what's the market appetite to increase prices? When you increase prices, generally you will lose some clients, you will lose some business. So, and that's okay, but it really depends how much are you actually going to lose, and is that going to be, are the floodgates going to open if you do increase prices? So you need to really assess what your market can bear. Are your clients happy with your current offering? So if your clients aren't happy with what you're providing, generally they're looking for an excuse to leave. So it's really important that your clients are happy with what you're doing before you pull that lever. Are you receiving positive feedback? I guess is a really important way to gauge that. Another question you should be asking and looking into, what are your competitors doing? So if you increase your prices, how is that going to impact, other people going to take contributions away from you? So you need to really assess your competition. Now, when I say assess your competition, I don't mean you need to follow what they're doing. You just need to be aware of it and you need to assess it. Sometimes what your competitors are doing is not a good strategy. So just following a competitor blindly is not recommended, but you should be aware of what they're doing and assess what they're doing. Another question you should be asking, are you adding value? Before you increase any price, you should be providing value for that price. And then finally so how do you know the answers to the above questions? Who are you speaking to find out the answers to these? And are you asking people these specific questions? So finally, considering all this, a common question that I get asked is, how much cash do I need to keep in my organization? So what level of cash do I need? And the answer to that question is, it depends. And I know it's not a great answer, but it depends on your forecast more specifically. So I can tell you, I can say, you need 6 months worth of operating, cash to cover your 6 months worth of operating expenses. But this might be too little. It also might be too much. By giving you a number like this, it's not particularly helpful because it doesn't provide you with a plan of action on how to address it. So for example, let's say I tell you need 6 months worth of cash to cover your operating expenses. Now, and then you realize, oh, I've only got 3 months worth. Then you ask yourself, okay, well, we need more cash. So you're identifying that you need more cash, but you don't actually have a strategy for actually getting the cash. It's very easy to say I need more cash, but actually doing it is another point entirely. Also, the world is changing quite continuously at the moment, and things tend to be very seasonal. So I think this reiterates the fact that everyone needs a forecast, needs to be forecasting, 12 months rolling at a time, in order to work out exactly what cash you need and at what time of the year. So I suppose if I was in everyone's shoes on the call at the moment, what would I do? So firstly, simply I'd do a cash flow forecast and do some scenario planning. So have 3 different scenarios. So a worst case scenario, a kind of mid-range scenario, and then a kind of a best case scenario. And that way you're kind of covering all your bases, because as we all know, the world is changing quite on an ongoing basis at the moment. The second thing I would do is I'd conduct a spending audit. So what are your overheads and fixed costs? And just making sure that you're actually not, when the times are good, it's very easy to get overweight in your operating expenses. So just making sure that you're actually not overspending in certain areas. Third, I'd look at your strategy. So what is your strategy affects what kind of affects your cash flow forecasting. If your strategy is to grow quite considerably over the next 12 months, then you're going to need cash to do that. So this impacts your forecast as well. And then finally, once you actually have your forecast together, it's really important to have governance around the forecast and to make sure that you're monitoring it and updating it on at least a monthly basis. It's not a set and forget. It's not I've got a forecast and I put it in a drawer. It's actually a moving beast that you should be monitoring and updating as you go. So that's it from me. So I will pass now over to Beatty to tell us about Yellow Canary.
Thanks so much, Andrew. And thanks so much for using my two favorite words in the English language. It depends. I'm going to try not to use those words today, but keep me accountable to it. So it's interesting. This year's survey result in the payroll space has got some really interesting trends when we think about it beyond the numbers and we compare back to the previous year. This year, 81% of you are confident that your systems are up to date and you're compliant. Headline, that's a great stat. However, last year, we're in a position where 90% of you were confident. Building into that as well, we've got in this year's results, 21% of you say that you're concerned about interpretation of awards and underpayment risk. And flipping that, there was 61% of you that weren't concerned. Again, that's a pretty good number in isolation. Last year, though, 84% of you weren't concerned around your interpretation. So when we compare the pair, a bit like the superannuation ad, there's some interesting trends around. We're in a space now where there is a lot of uncertainty. There is a lot more activity in the not-for-profit space with the Fair Work Ombudsman. And I think we're seeing that translate into the survey results this year. In terms of why that's happening, that's something that I'm going to unpack on the next slide. But the headline is that the NFP space is growing. So there's one of the stats that underpins the NDIS workforce plan is that there's going to be an additional 350,000 workers in that industry over the next 2 years, which is a 50% increase on 5 years ago. So these problems are only going to come bigger as organizations like yourselves continue to grow and expand and face these teething problems. But we'll flip over now into actually what has changed in the last 12 months. And it has been a lot in the industrial relations and payroll space. It's not one that gets a lot of airtime, but we've had the backdrop of changing government. We've had a lot of union activity over the last 12 months and even the last 6 months since that change. We have had a lot of social enterprises and NFPs in the Ombudsman's spotlight. So we've seen a lot of enforceable undertakings where well-meaning organisations that are doing their best with the resources they have been called out by the Ombudsman, which again is meaning this issue is front and centre for boards and management teams. We also had the Jobs and Wages Summit because a changing government loves to get people around a table for a yarn. Out of that, though, there was a lot of activity and a lot of things that will likely have impacts, and we're seeing them play out with some of the recent bills that have come out over the last fortnight. One of those big items is, and this is quite an impact in the space where you might have an enterprise agreement. You might have that enterprise agreement buried in your drawer from 2002 under one of your entities, and we've forgotten about it. We've rolled on, we've not paid any attention to this enterprise agreement. We are just paying people what we think they are worth or what we think they should be paid under a different award. And lo and behold, technically that agreement is still in place. We call these zombie agreements. Again, we try and make this stuff as interesting as possible. But one of the changes that has come out in recent weeks is that if the bill goes through, zombie agreements are automatically terminated. The reason that is going to be challenging, it means that if you are one of these organizations that has an enterprise agreement that has expired or rolled on, technically it's if this goes through, it'll expire, and that means you'll have to apply to renegotiate, which might be a consideration in terms of forward planning around that. The other one that is getting a lot of press is around multi-enterprise bargaining. So particularly in a lot of the space that all of you on the webinar operate, whether that's in community, whether that's in sport, whatever the cluster is, if proposed changes go through, it means that unions could invoke multi-enterprise bargaining. So it could be you and potentially a competitor having to bargain around an agreement, which just adds, again, another layer of complexity there. If we now move on to the next piece, a lot of the question, and certainly what we've seen come through, is we're seeing a lot of interest from people in the not-for-profit space because this ime is so front of mind. And the question that we often get is, why is this happening? We're doing our best. We are not intending to not pay people correctly. How do we end up here? And it comes back to this Venn diagram of which you can see. Historically, legal teams, workforce planning, so whoever's looking after the rostering, payroll, and the technology folks are all in silos. And if I'm in legal, I think that payroll are sorting out award and interpretations. If I'm in payroll, I think that the lawyers are going to tell me what to do. And this means that we're all thinking about different things. And this leads to the gap where payroll compliance can be missed or can fall into the cracks. How this plays out and some of the key elements of why it occurs and things that organizations like you can look into to check your own risk and reduce that risk. One of them is typically around updates to the instruments or the awards being made. I think of an example around those of you that have organizations where you have people working overnight or who look after overnight stays. That has a different pay rate compared to if it was only day placement as opposed to overnight stays. And you have to work your way through a really detailed agreement to find that. The other one is rostering and shift planning. So if rostering isn't talking to legal and they aren't talking to payroll, it can mean that things like overtime might not be being paid because this is just the normal shift that I roster this person to work. The other two big ones that we see, particularly within the NFP space, is around the classification of employees. And this is really, really hard at the best of times. I'm sure you could speak to 4 different lawyers and get 4 different answers, but often we see the case where an organization might be employing a cleaner. They pay that cleaner under the cleaning award. However, the rest of the organization is under the SHADS award, so the Social Community Housing and Disability Award. And there might actually be a reason for that employee who was under cleaning to be paid under that community award. So having then been unintentionally paid incorrectly because of that misclassification. So that's always the first place that we suggest people to look. If we now move on to the next one, the question is, well, how do we get it right? We know that we're often operating in silos or we've got issues with classifications. We'll have disparate issues happening across the business. It's important to take a step back, which is hard when you're incredibly busy and you're worried about cash flow, inflation, technology. To the extent that you can, having a look at the broader organizational view of compliance and taking a kind of a multidisciplinary view. So I know that often that stat earlier, finance teams can be 1 to a handful of people. It's important to get those people around the table that have a role in the Venn diagram, as well as creating a culture of compliance across the business. It's not often labeled the most exciting thing, but it is the thing that will allow you to do the right thing by your employees and have real confidence in that as well. As well as the education piece. So educating, those are the team who look after rostering people or they're setting their start and finish times, helping equip the level of understanding of the payroll team around what entitlements are and how to process those, as well as having the confidence of independent audits and checks where you're able to, on an ongoing basis, have that confidence that you're continuing to get it right. And if not, you're able to rectify and remedy things quite quickly. And of course, having trusted advisors who you can call on to support with giving you the confidence that you're getting it right, but also the advice with the tricky stuff, because this is a really, really complicated area. On that note, encourage any questions after this, but I do want to move us on now to Aidan.
Thank you, Bede, for that. Just think maybe the solution now is we ask all our staff to be volunteers and maybe give them a monthly gift in a pound of cash in a brown paper bag, and maybe that will solve.
Only if you pay cash, Aidan.
Okay, right, got it. That's my key takeaway. Now, actually, Bede, you mentioned the zombie agreements. Does that mean that once an EA is expired, it doesn't roll forward automatically now? There has to be proactive action taken before it expires?
Yeah, that if the proposed changes go through, that would be the case. So it would make, as soon as it's expired, it's out of date and you've got to renegotiate.
It's interesting, isn't it? Very interesting. And I think one of the points that one of our panelists made earlier was focusing, making sure, I think it was John, making sure that we focus on the key stuff, and obviously payroll compliance is a key matter, and that links to what we're talking about. Is then if you can free up time, whether that's through resourcing, through technology, whatever it is, so that you can spend the money and focus on those risk areas. That freeing up that time by, like what we do in audit, Ashley mentioned this earlier, is we've got many standard letters and reports. Now they're all tailored specifically to the client, the industry, the clients, and the issues the client faces. But there's a lot of that stuff that is fairly standard as well. Like, where is it a company? Is that a listed company? Is it a company limited by a guarantee? Is it an association? What the board call? Is it the board of directors? Is it a committee? Is it responsible persons? What's our materiality level? So a lot of that stuff is fairly tedious to go through and check it or change it, and things get missed all the time. But if you've got a question, you've got these bots that actually the team set up that ask, okay, what is it? Is it a company? Who are you addressing this to? The board of directors? What's your materiality level? And it goes through and actually fills in all that part of the letter for you. So we can focus on the key bits, which is what the audit risks and what we've done to address those risks. And we don't need to be concerned about all the other parts that in the past would have taken a lot of time. Now, when I look at the Q&A, our presenters must have all done a fantastic job and answered all questions that all of you would have had. So I'm going to thank you all, thank our presenters for their participation and efforts, and thank you for attending. But before we go, I'm going to pass over to Kim, who's got some further news for us.
Thank you, Aidan, and thank you very much to our panellists today. So as a valued member of our ENFP community, we are providing a complimentary review. So please take the opportunity to complete this polling question if you would like to participate in the review. So I'll just leave that up for a little bit of time, Tanya. So the report plus the recording and our presentation will be sent out early next week, as well as being uploaded to the ENFP community LinkedIn group. Our ENFP program next year will again be delivered as a combination of face-to-face and online webinars, and our year will kick off with an update from the ACNC in February. Actually, Aidan, have we heard whether we have a new commissioner, or do we still have Deborah Jenkins in the acting role?
I haven't heard any news, so if anything's come out in the last hour or so, but I think Deborah's still the acting commissioner.
Okay. Well, it would be wonderful. We've had Deborah present before, and she's just an incredible person. So our ENFP Christmas wrap-up will be held on the 14th of December at CommBank. So invitations will be sent out this week, but please pop that date into your calendar. And I think our event will commence at 5 p.m. So I would like to personally take this opportunity to wish you and your families a wonderful Christmas and a restful break. And let's hope that let's hope 2023 brings back a little bit of normality into our lives. So thank you all again for being on our webinar today, and I look forward to seeing you in person on the 14th of December, and I'm sure that we will be getting a visit from Santa. Would that be right, Aidan, from Santa?
I'm going to be in Scotland. I'm going to be in Scotland. So
oh, you're going to be in Scotland, right?
which,
we might
which
have
is
to
possibly colder than the North Pole.
We'll have to find a Santa's helper. Thank you, everyone. Thank you so much. That concludes our webinar for today.